Hey everybody, it's 12:30 on East Coast. 1:30 on East Coast. Everybody's heading out to the Hamptons to catch the summer sun, the summer wind. The summer wind came blowing in. So I wanted to do a end of week update here for paid lunch. I wanted everybody to get a handle on this, so I'm recording it. It'll be in the paid lunch podcast in the podcast channel when I'm done. The purpose of the recording here is to give you an update on what some things I've observed in the market that I think are critical to understanding where we are and where we could potentially go from here. And there's two places that I looked at to kind of go back from a time standpoint. The time frames were August of last year and early January, early February, January to early February of 2018. And the reason I did that is because I was looking for some patterns to kind of try to figure out where the market is right now. And what caused me to start thinking about this was how quickly NVIDIA got rolled in the last few days. And I started out with looking at that first because it was sort of the leader into this run-up that we started in the beginning of middle of May. And we caught this run-up, by the way. Everybody should have banked on this. But there's some things happening with the Qs overall that are serious enough to make note of. So that's why I decided to record this and go through it. So I looked at the Qs and I looked at the advanced decline lines. And the advanced decline lines, and NASDAQ has still continued to go up. I've got the Qs up here so you can see this, right? As you get to about the middle here, or a little bit past the middle, and you take a look at the advanced decline lines on the NASDAQ on a day-by-day basis, even on these days that were green, and there's a lot of them in here, right? Even on these days that were green, as we get up near the top, there were more, the decliners were increasing at an increasing rate. And the reason this thing kept going up is because it was led by the major tech companies that consist of that. And so I took a look at this. I took a look at where the RSI is on it. On this day, the RSI was trading at 80. That's sort of the top of that trading channel. And you can see I've got a trend line drawn up here. It is dancing around that trend line right now. So I decided to go back and take a look at the leader that caused me to start thinking about this way. And that is NVIDIA. Where are you, NVIDIA? Right here. There's the trend line on NVIDIA starting at that point in time in May when we started to catch the uptrend on the Qs. It broke the trend big time, right? Look where the RSI is up here. RSI was at 80, a little over 80. That's not sustainable, okay? And that started to lead the charge from here down. Let's take a look at Apple, which has been doing just extraordinarily well, right? Here's Apple on the 1 year. This is beginning of May, just like we talked about, right? RSI right here at 75. Look where it's at now. It is up. What am I saying? It's up at 75 right now. And you can see it started to flatten out here while the tick was still going up. That's a divergence sign. It's a sign of divergence on it. Continues to go up, starting to flatten out and starting to come down. And look where the stock RSI is. Stock RSI predicts where this is going to go next. Stock is down here in the orange. RSI, regular RSI is up here in blue. This has started to take a pretty severe downtrend starting uh, 2 days ago. So that's Apple. Let's take a look at Microsoft. These are all the biggies that led this charge up while the advanced decline line was getting less favorable. Microsoft, same thing. Look at the RSI flattening out while this thing's still going up. Flattening out, still going up. That's a divergence. And the RSI right now is trading at 73. So does that have a little more room to run before it gets into that 80 area, which is kind of danger zone? Yeah, maybe. I don't know. I can't tell you what the future's going to bring. All I can tell you is that I'm looking at something that is going on with these majors that could potentially show us that there's going to be a little bit of a pullback here. Google. Also above 70. Also flattening out on the RSI. Also going up, diverging. Amazon, I suppose I could say that. Amazon it's a strange animal, but RSI really moves around on this, so it's not a great indicator. The RSI up here just a few days ago was trading in the 75 area. Now it's down to 56. This is the daily chart I'm looking at, 1 year. So Amazon kind of trades on its own merits as well, just like Tesla to a certain degree. But all of these babies have run quite a bit, and they've done so while we've seen an increase in more declines than advances in the market. So I'm quite comfortable moving some of my trading strategy to credit spreads specifically. I don't know what's going to happen today, tomorrow, next week, next month, but I can tell you right now that these charts I'm showing you, they look frothy. All right. I mean, the Qs are sitting right at the trend line right now, and the RSI right here starting to come down. Look at the stock RSI here. It's a big drop. It hasn't dropped at all like that at that angle all the way back to, what is this? This is February or May 24th. Had a few days it's down, but I mean that's a plummet. So there's sellers stepping in here. What's the market doing right now? So are there big seller? Is there big selling? No, it's low volume. So that's what makes me hesitant to say the trend line on the upside trend line on the Qs has broken completely and that these things are going to take a tumble. But I think it bears caution. I think it makes sense that you take a look very specifically at a ticker and understand, where it is in relationship to the past, and be cautious about taking any positions. As options traders, that means tight spreads. I'm doing credit spreads in the next few days. I want to load my account with that. I think that's the right way to go for now. So I'm recording this for the second time, by the way, because the first one ended up crappy. So doing double duty in the paid lunch segment today. 2 paid lunches, but only one's going to be up. Just this one. Hopefully this one works out okay. So anything else that's relevant here? By the way, last night, I don't know if anybody noticed this. Janet Yellen was on CNBC after the market closed, right? And she was questioned about inflation. They brought up a point and asked her specifically. I don't know exactly what it is, but I don't know exactly who asked it and what the question was, but it was related to inflation. She essentially said that the inflation well above where we're at right now is not out of the question. So, and I think that Powell testified yesterday and talked about the Federal Reserve's easy money policy, and he's pretty well concerned that the shocks that we're seeing in the system are going to last a little bit longer. And that's caused by the reopening of the economy and all the things on the supply line that go along with it. Although the retail report this morning showed a pretty good number, much better than what we thought, and consequently, you have a retail stores and retailers on the internet being able to pass along the inflated costs they're seeing during this point in time. Prices don't retreat as easily as they go up. When they go up, it's harder for them to fall back down, right? So I don't know if this inflation thing is going to last for another month, another 2 months, another 3 months. It affected the market a few months ago. People panicked a little bit, but but the 10-year started to peel back, and everybody started to get more comfortable, and that's what happened to kick off this run we've had from the middle of May. All right. So, and the Nasdaq is going to extend its losing session here, and I think it's going to end up down on the week. If you take a look at the technicals on it, the 21-day exponential moving average, it's starting to slide down around that area. S&P has backed off. The Dow has backed off. So Dow doesn't seem to be able to get decisively above that 35,000 level. So I think the big picture right now is just tread carefully. There's some pretty nasty reversals across these growth stocks that happened across some of them. Okay, and I mentioned Nvidia as sort of being the leader in that, and that's not a stumble it took. It wasn't a blemish. It got rocked and socked. So I've got a very close eye on that because it was kind of the leader up and might be the leader going back down. I think that Advanced Micro Devices, which is also a chip manufacturer, the strength of the company is you can't argue against it. All right. But AMD has not performed alongside the leaders in the tech space during the course of this run. That's a little bit concerning as well for the chip sector. All right. You can see it was at an all-time high back here. Hasn't reached that. That's in the beginning of January. So it's really kind of lagged, and you can see what's happened here with the RSI just plummeting. Starting right about here, it starts to plummet. You can see the stock RSI as well. So, it's a strong stock, and I wouldn't hesitate to buy the stock. But I'm hesitant to take an options position here on AMD. They're reporting, by the way, at the end of July. I forget the exact date, but last week of July, and that's going to determine whether this thing goes back up here again and gets to all-time highs or not. So the analyst earnings on AMD, and AMD is a key stock to look at for anybody that plays it. That is an overall indicator of a lot of aspects of the tech market, and they are expected to have massive earnings. So with an expectation of massive earnings, just getting massive earnings may not be enough, right? So I have an eye on watching that. In general, the earnings season we're rolling into right now is going to be really telling for us. So we've got to keep a close eye on it because the expectations are for very, very high earnings. So is this all priced in already? That's my concern right here. So caution, yellow flag. So if you would kindly be careful and not get rolled over because of this market, I would appreciate it. It helps us open up for another day of business. If you see something you really like and you know it really well, post it up here, and we can talk about it. We can dissect it and to see if it makes sense. If we decide to do something, then a tight spread for entry is the right way to do it. That's the right trading strategy, alongside a gaggle of credit spreads that you can keep flipping for pretty easy money over and over. That's my update for Paid Lunch, July 16, 2021, middle of summer with the summer swoon coming.